Okay, people, back to Personal Tax Finance Act 2024. Practice papers, again, using a publisher's one. The AAT ones are far too valuable. Don't ever watch one being done by somebody before you actually do it first. There are publishers' papers available from all the main publishers, so BPP, Kaplan, Osborne. This is an Osborne one with a few minor little alterations. They're hardly noticeable. They're all really good, but I've chosen one that's got lots of interesting questions that hits the main topics. So this one then, task 2 and 3 we'll do now, put the other rest of the tasks in different videos, is about benefits, starting off with the car benefit. So let's have a look. We've got our reference material handy, because you can't learn all that by heart. You probably would be pushed to remember this one under exam nerves, so make sure you know how to access it online in the exam. Far more important than, say, the indirect tax material, where students do sometimes manage to learn everything and still manage to pass, although they get better marks if they use it properly. So without further ado, read the question carefully. What have they got? 2 cars, adding up to 12 months, so we haven't got to worry about them overlapping. It will just actually be an additional car. The list price is what matters. The price paid is irrelevant. This is because a discount on a car could be given to a director for buying lots of managers' cars. And also notice this is revenue contribution towards the private use of the car, not towards the purchase of the car. I mean, 250 towards 35, 350 is not going to make much difference. They've given us the scale charges for the calculations, so they're not in one question asking calculate scale charge and the benefit in kind. Scale charges will be calculated in part B. So let's have a look. What do we need to know? We need to know that first of all, it's 5 out of 12 months for the BMW. And then we need to remember it's the list price. And we need to know it's 25%. And then take off the 250. If I was doing it on a spreadsheet, that would be fine in terms of bid mass. However, it will be rounded down, although I don't think many examiners would particularly penalise you for that. So if you put that into your calculator, you should get, there is another version that's going around where that's actually 38,350. Don't worry about it, this is the current version. And then the provision of fuel. So again, it's still 12. So she would have to pay for all the fuel, not to have a benefit in kind for fuel. Not $250 a month or whatever. It's got to be absolutely every penny. However, it's now that 27800 figure that we saw in the reference material. And the same 25%. And just to show that we could do if we wanted to, be clever, we could put equals in, it'll come up with a number. This one again, publishers and HMRC would round down. Get lots of conversations about rounding up or rounding down, and the answer is easy for those of us that were using paper-based books 30 years ago, when everyone was in a different row, but they didn't print one for every percentage or one for every gram, so it always went down in chunks, national insurance and tax as well. So that'll go out to 2895 rounded down. Honda, very similar, just got to remember it's now 7/12, and this of course matters now, 37250, because that's a big difference. Times 20%, or 22%, minus the 350. Typed it right even if I didn't say it right. Again, rounded down, or this one does round down anyway, to 4430. And then one last one, similar pattern. remember this is now fuel, so it's a 27800. No discount for part payment of fuel, and that would round down to 3567. Now we've got to calculate it. Electric vehicles, no CO2 emissions. It isn't actually brilliantly clear in the reference material. CO2 for petrol, electric range, diesel. Doesn't really tell you that much, but actually that 2% NA is for electric cars. It's not really that clear. I suppose once you know what it means, you know what it means. So 2%. Now this is one of the unwritten rules, so you have to know that 5,000 maximum towards capital contribution, had that come up in part A. However, this one you need to know there's a 37% maximum. And instantly looking at that, well, let's just prove it, because if we do 194 minus 55, $139, well that'll actually round down anyway, so again it's a rounding down issue, it goes up in fives, so that's going to turn out to be 135. 135 divided by 5 is 27. 27 plus 16 is 43%, but it's not because it's capped at 37. So good old Osborne, making sure you know that, because it's not in the reference material, that maximum 37%. There is no limit on the price of the vehicle in question, so if you get a nice Bentley Mulsanne, it doesn't matter, or a nice Ferrari, you pay a lot more car benefit. However, it will still only be 37% of the price. Just 37% of a Bentley Mulsanne is a lot more than 37% of a Mini. So let's have a look. Next one, so moving on, other benefits in kind. So bear in mind you do need to look at this if you didn't know it, but actually it's 10,000 minimum, this one, so this is below 10,000, so actually that's why this one will be 0. Doesn't matter that it's only 1.5%. if it's below 10% it's not considered a benefit. We will have one later, I'm sure, where it is over 10,000 and you've set, if you pay 1.5%, if it was over 10,000 the cost would be 0.75% of the loan, and that's one of the answers here. And then an unknown rule, mainly because the beneficiaries have to know to claim it off HMRC and often don't know. Her miserable employer is paying her bicycle rate 20p per mile. So let's have a quick look. We'd better go into the guide, the reference material. 45p a mile for the first 10,000, then it's 25p a mile. No mention of passengers. So what should she have been paid? I would do 10,000 times 0.45 and 1,500 25. Total of 4,875. What was she paid? $2,300. $2,575. That's good because that's one of the answers. We just got to remember what the rule is. She can go to HMRC as the mileage was entirely business orientated for the business. She can claim it back. as tax-free income effectively. Then this one, okay, again, rules to know. Some of this is in the guide, some of it isn't. There isn't this much on pensions. Salary's 30,000 and it's a personal pension scheme, 5% of his salary in cash. Really, occupational ones are clearer, but we'll take this one for what it is. So let's have a look then. So first of all, we better I'll do it here, because 30,000, and then we need to gross it up. So we've got 1500 and we've got 1875, so make sure you understand the difference when to gross up and when not. Divide by 8 times 10, in other words it's treated as 80% even if you're a higher rate taxpayer. So just double check, we've got this for, yep. And what's going to happen is the basic rate band will be extended by 1875. So his 37,700 will become a bit bigger. The point before he starts paying 40%, which might actually change him. And his taxable salary will be reduced by 1875 in effect. So doesn't pay tax on 1875 because it's all going into the pension fund, which is a good idea, obviously, from the investment point of view. Pension companies own most shares in the UK, provide a lot of money in loans and other versions for the government. So we're quite happy with them doing this one. So this one then, she's paid £900. The boss thought it was excessive, only reimbursed. We've got another miserable boss. Hard luck to Sandra. If she's paid too much on expenses than the manager thought she should have, she's got to pay it out of her own pocket. Sorry, Sandra. And then these, we either know them or we don't. Little bit of stuff in the guide. So yes, there is stuff in the reference. Let's go into the reference material. There is a section about accommodation, living expenses, cash, pay, workplace, childcare, nil. That's going to be one of the answers. Sports facilities, parking spaces. That's okay. I'm just going to go through these. And tick the right one rather than keep going back to this one. So that is taxable. We've already mentioned earlier, low interest, we'll assume it's below the 2.25 and over 10,000 matters. Workplace parking is exempt, you don't get charged tax for workplace park. Your company may ask you to contribute to the cost of the car park, that's different. And this one does create a few issues. Company van for journeys to and from work and business journeys, that's fine. It's not so much that version of the question, it's when you use it locally. So if you use a company van because you go straight off to clients, whether you're a central heating engineer or delivering something or fixing something, or you just happen to only have a van available, you would expect that one, but you can obviously take it home because sometimes tradespeople start early, and if you happen to nip round the shops, or something like that, or visit a relative or whatever in the evening, that's fine as well. A small amount of private mileage is okay because you've had to use a company van, your car may actually be left at work. Subsidised meal staff available to all staff is all okay. It's got to be all staff though, you've got to know that one. What's mentioned in the reference isn't that clear. However, if you are sort of bar work or waiter or something and you get tips, you should be declaring it and paying tax on it. That's okay, that's the maximum for a staff suggestion, that's fine. Pool cars, well that's what they're there for, you only use them for business journeys, that's almost a silly question. And the 8,000 is the limit as well for due to change in place of work. Your new employer, it's a new employer or whether it's an existing employer, they can pay towards your removal expenses up to £8,000. And yes, employ it in a workplace creche, as long as they pay for it, it doesn't have to be on site, whereas the parking has to be close and sports facilities have to be on a site that they own. You wouldn't want a workplace creche somewhere near a nuclear power station or a coal mine. So we have rules on that. Right, next one, task 3. So more benefits, and also on this, to start off with though, dividends. So it's tax on savings and investments. So first of all, she's a higher. Automatically, just look at that figure, she's a higher rate taxpayer. It doesn't actually make any difference because she still gets the £500 dividend allowance. So dividend allowance of £500 is available to everybody. So what we need to do is quickly work that one out. That's going to be 5,900, and the rate, in case you can't remember in the exam, right at the top, so I went fairly quick. Higher rate taxpayers pay 33.75%. So equals 33.75% times what would be 590. Would round down, but this is fine. It's exactly what that. And then John, okay, so what they're trying to confuse you, 360 in IS, that's not taxable. Read carefully, is other taxable income after the personal allowance is just under the threshold, so he is a basic rate taxpayer, which means you get £1,000 allowance. That's in the reference material. I might as well just quickly go back to it just to show allowances, savings allowance. However, notice there's nothing there for an additional rate taxpayer because they don't get any allowance on interest from savings. So if you take the £1,000 off, it's only £150, and taxed at 20%, the same as his income tax. Now Stevie is additional, already mentioned, a zero savings allowance, so she will pay 45% on the 1400. Again, don't need to worry about rounding, it's 630 exactly. I've done the sums earlier. So again, okay, so what we've got, so rules on residential property. Essentially, allowable is a cost that you have to have every year for the running costs. Not allowable in these cases are all going to be because they're capital cost added to the cost when it was invested in or before it was first let out. So you are allowed a flat rate. Yes, if you're a landlord, you have to visit your property. It's part of what you need to do. So no reason why a mileage can't be given. And if you pay the council tax either for your tenant or because it's empty, it's an allowable expense, as are the management charges. We're going to do some with that in a minute. Legal fees for purchase, though, that's capitalised, so effectively it's a capital cost, not a revenue cost. And then depreciation of furniture is capitalised items. You don't have to supply furniture. It will be subject to a capital allowance. But redecoration, as long as it's not refurbishment or major improvements, is fine. Loan had to do with the capital cost. And then we've got a couple of numerical examples with the same numbers in. It's not the hardest question I've seen of this nature. You just have to read the wording carefully. Again, with all these questions, read the wording carefully. Rented out for £750 a month, not received. If it was £750 received, the management point 3 would have already been taken off. So if it said he received £750, that wouldn't be an allowable expense. Somebody's trying to ring me. They can wait. Read it carefully. Building insurance, that will be fine, but a new kitchen before we're not going to include, because that's capital. We've just done those kinds of expenses here, so it's pretty much the same question with numbers. So let's do the numbers then. So okay, so it's 750, and we've got to work out the numbers, wasn't it? July, so 1st of July, so cash basis, so July, August, September, October, November, January, February, March, April, so April the 1st will count, 7,500, and then the expenses paid, the 250. And what's the 250 for? Insurance, so that's fine. And then the management fees, correct my own typo. So the management fees were 10%, which is going to be 750 plus 300. And then the actual rent income works out at 6,200. Now the 1-bed flat, the whole year, so that's the income. What can he do? Repainting the windows, that's fine. And insurance of 300 is also fine. So 900 of that, 6060, can do that one in my head. And that's 2 tasks done.